Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you're in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Okay, let's get over to some charts here. Let me get over to screen one. Stand by. Here again, you might hear a little bit of whistling, and that's the fan blowing in the background here. Let me see if I can get. Does everybody see the Weimer chart? Anybody not see the Weimer chart right now? Weimer, 4 range, all the template, Viper template. Oh, you see it? Everybody sees it? I see some more people coming in. Hey, Chris, Bob. Don't worry if you come in late. You know the drill. We're just getting kind of started here. You haven't missed anything yet, so don't worry. Plus, this is recorded. It'll be up on the web tomorrow. Weimer's up. Okay, good. All right, so let's talk about some things here. So tonight's topic is optimal entries, but we have some other topics that people have brought up, which we're going to address tonight. And I want to start off with YM here. And you can see that going into the open of the market here today, which was Thursday the 31st, put a couple lines on here for you to sort of orient you a little bit. There's midnight Pacific time. Just translate that to your local time zone. And then you open the market, of course, is right here at 6:30. I'm going to blow this up a little bit more so we can get more detail about it. I'll just leave it like that for now. So one of the things that came up in the pre-webinar discussion was, and I've talked with several traders about this very topic this week, and that's why I'm focusing so much on timing and entries, is because that's such a critical part of trading that you got to get the entry down, or the rest of the trade's going to is going to be a problem. I want to look at some different setups here. Now, I know some of you have had issues seeing where to draw the object trader box, or region that we call the region of box, of course. And I have a workaround for you. Okay, if you're having issues, you don't have time to draw the box, or you can't see the box, or whatever it is in regards to the box, we're gonna give you a workaround, a real easy workaround for you. Okay. I want to look at some different types of setups here, and tonight I'm going to primarily focus on mid-band trades. Mid-band trades. Mid-band trades take different forms, and this chart that you see here is kind of a microcosm study of the different types of mid-band trade setups that you actually get. Some of them are clean, some of them aren't clean. So what do I mean by that? Let's look at some setups here. Let's go into this market before the open and look at this pre-market trading session here. And if you think of a box, I'm going to look at several areas. I'm going to look at this area right here, I'm going to look at this area right here, and then I'm going to look at this area right here. Markets can do one of three things in terms of retracements at or near the mid-band, and we have to deal with each of them a little bit differently. Sometimes a market is going to go just shy of the mid-band in an uptrend, as this case, of course, you can see we're in an uptrend. The background is green, bars are primarily blue, mid-band and all the bands are stair-stepping up, and so we are looking for long trades. We're looking for retracements to get long the market, right? Now, sometimes they're going to go just shy of the mid-band, like this one right here did. Here's another example of one right here, like this, right after the open. Technically, that is a retracement, right? So in order to have a retracement on a chart, what do we mean by that? Well, you have a market has to push in the trend direction, which is called the thrust part of the move. And then a market has to have a pullback, which is the retracement we use to get in. I know a lot of you don't like this. I understand that. You've vocalized it to us many, many times. You're concerned that, and let me try to alleviate some of that concern. In the case of this region here, if the market decides to go deeper, like this, or do we really care? In other words, until this candle breaks up right here to get you long, we really shouldn't have any concerns about the market going deeper, yes? Because if you don't, what I'm saying is, if this bar never formed and you never got this leg here and it just continues to go down, you never got long in the first place, right? Now, what's a workaround if you don't have time? Several of you said that there's timing issues and you can't see the region, you can't draw the region, and you want to get in. What you're going to do, okay, I'm going to show this now for everybody, and it's a quick and dirty way to get in, and essentially is similar to drawing a box, but you don't draw the region itself. I'm taking my mouse and I am right-clicking on the chart. It's going to bring up this menu right here. Now, what you want to do, here, I'm going to have to move this over to the right-hand side of the chart. Stand by, please. Let's pretend we're trading this market really early, and we see the uptrend, and we want to get in. We don't have time to really draw a box, and we don't really want to hit a market order because of the concern that it's going to go deeper, right? If you hit a market order, you could get in, and then it retraces, and you stop out. I understand that. So what else can you do? You can right-click on your chart. So I'm right-clicking on my chart. You're going to want to do that up here. Now, what type of order are we going to put in for this type of trade? Are we going to put a buy limit order in, a sell stop order, or a sell stop limit? This is your three choices to put an order on the chart. A buy limit, a sell stop, or a sell stop limit. We're referring to these candles right here. So I'm specifically addressing this retracement on these candles right here. What type of trade are we going to take? Are you buying or selling up here? Buy limit. Good. Now, what you want to do is you want to put that buy limit up here just to get it on the chart, and then you're going to drag it down to where? Right here. So, by putting a buy limit order above these candles, you're doing what? What are you doing? Isn't it the same essentially as putting a region box on? Let's go ahead and advance the chart. Okay, that bar closes up, and you're filled long at 21,903. You're filled long on that limit order right there. Now let me be clear on this, okay? There's some advantages and disadvantages to this. The obvious disadvantage by not using the region box from Object Trader is that now you manually have to go in and put in targets and put in your stops and manage everything, okay? That's a disadvantage of it. The advantage is that sometimes in fast-moving markets you might not have time to draw a box, and that's a good way to get in without using a market order. But here again, the downside is, you're going to have to put your targets in yourself, so you have to put a sell target in, and then you're going to have to put your stop down here manually with the sell stop to protect yourself against adverse market conditions. Now, in this particular case here, you don't have to put this stop all the way under the mid-band, you could put it, say, a tick or two under that last bar there. So essentially, this is your risk right here. You only put this, if you do this method that I'm showing you right here, you only put this protective stop in after you're filled. Okay. The reason I say that is if you put a sell order in here and it does go lower and you want to get long, you could be filled short and you don't want that, right? So this doesn't go in until after you're filled. If the strategy is already set up and running, yes. Once you get filled, it will put in the targets and the stops for you. If you're running Object Trader on the chart, yes, that's another way to do it. Another way, obviously, is bar close. That's another way to get in on OT, region box, and of course, we all know you could draw the ray using the ray tool as well, and it would be filled. But the limit order here above these candles is a quick and dirty way to get in, but it leaves you having to put in your targets. Now, it went up there pretty quickly. You know, you could when you manage your stops and your targets, as the market moves in your favor, you move the target out of the way and let it continue to rise, and then of course you follow the market up with your stops like this. You can let the market run, trail your stop, and then eventually, depending on how tight your stop was, keep moving your target out of the way, trail your stop. See how a little bit of a pain that is? Object Trader would be taking care of this for you if it was running through OT right now. So with a limit order, you got to manually do that. Does everybody see that? Let me do another one. Let's do a couple more of these, okay? So everybody sees what I'm talking about here. Let's go look for another one. Okay, that turned out to be a good trade. All right, let me do another good example here, and I think this is a more complicated one where we're going to get into more issues that will need to be discussed. When looking at a mid-band trade, I'm going to ask you some questions, and I want everybody to participate in this. If you want to learn how to do this, please join in. I don't ask these questions on a rhetorical basis where we can all sit like bumps on the logs and not pay attention. If you really want to learn this, then you should try to answer what I'm about to ask you. If you were going to put a buy limit order on this chart or form a region box, where would the top of the box go? Would it go there? Would it go here, as these bars are forming, or here? Would you put so this is a buy limit order again, and or top of your box. Would it go here? A, let's call that level A. Would it go here? Let's call that level B. Or would it go here, level C? A, B, or C, limit order or top of box. A, B, or C. So we can see this is the retracement market of the YM market here. It is definitely retracing. We see these candles forming around the midband. This is a bona fide midband trade. I'll give you 10 seconds. Just type in a letter, A, B, or C. Okay, we got a lot of A's, a couple of B's. We got one C from MG. It's primarily A's with a couple of B's sprinkled in there. Let me explain what's going on here and why this is a little more complicated than a simple, straightforward box. It's because of this. In my view, when you look at this candle, this doji, let me get this limit order out of the way real quick, and let me pull these back a little bit so we can really talk about them, just so we're really clear about this. In the case of this bar, this bar, and this bar, these 4 bars that we're examining right here, is the market continuing to go down or up? These bars right here, the yellow ones. It's continuing to go down, yes? Now, when I assess a box, and I want to be clear about this, okay, I don't want to get too confusing about this. When I assess a box, I usually go back at least 2, most of the time 3 candles. Occasionally it'll be 4. So what I'm saying is, if you look at this doji candle here that wick through the midband, I go back and I look here. This is unquestionably an aggressive entry. In my view, on this particular retracement, the market would have to break this level in order to be considered going up again. And so that's primarily how I form my boxes, and I would put the buy limit order right here. In other words, as long as it's bouncing around in here, I don't care too much about it. I know there's lots of wind on the mic, Lee. It's 95 degrees here. I'm sorry. You're going to have to put up with a little bit of it. So, my apologies. Some of you came in late and didn't hear that. Now, listen. There's no question that answer B was a more aggressive entry at the top of that bar right there. And, in fact, you would be filled on this bar right here. Yes, if you did. If you had a buy limit order sitting here, or the top of the region box sitting here, then you were not filled long. Let's see how much heat you felt on the pullback here. You got in at 927 and it went all the way to 16, so you had 11 ticks of heat. So if you had a 12 tick stop, if your sell stop was 12 ticks down, it never took it. You got filled on that bar right there, right here. And you felt 11 ticks of heat all the way back down to here. Did everybody see that? So this is a little more complicated because there's a lot to consider when this retracement's happening. This is like 3 o'clock in the morning, so this would have been 3:12, and these bars 3:28. So you're looking at about 15 minutes. These bars just kind of sat in here like this. Now, let's say hypothetically that you did go with B and you were filled long on this bar right here. Or you had bar close turned on and it closed up and you got filled. Either way, you're long on that bar, okay? Let's suppose that you had a 10 tick stop, so it was a little too tight and it actually wicked you out probably somewhere like right in there. Or no, 10 ticks would be 17, right? 17. No, 10 ticks would be down. Yeah, 17, right there. So the wick of that candle, you were just a tick too tight and it got you. Do you have to give up on this trade? No. You got another chance to get in right here when it started to form this box just above the midband. You got another chance to get in right here. See it? In the case where it came back up to here and you are reboxing or looking for re-entry, where would your buy limit go? Right there. Let's take the other 2 off. Did everybody see that? So just to recap this setup, and I'll do it both from a region box and a limit order perspective. As this market is retracing, you had several opportunities to draw a region box. The least aggressive would have been a box that looked maybe like this. It's a little bit large, but we don't really care about the bottom of the box, mainly because we're only looking for a close above it. That's the same trader who would also put a buy limit order in right there. You never got filled on any of these bars because it stayed around the midband here, right? The more aggressive traders who drew more aggressive region boxes, one that looked like this perhaps, and a super tight one that might have looked like this, with corresponding buy limit orders that might look like that and this respectively. Yeah, you got in. On one of these bars closing up, you were definitely long. Now the trader who was long from here and the trader who was long from here, this one's not in it yet up here, right? Depending on where your stop is, if you were filled here and you had a 10 or 12 tick stop, your stop's way down here, so you're okay. It never even came close to you. So you're going to feel some heat on these trades. All right? You're going to get filled. You're going to be up a couple of ticks. It's going to pull against you a couple of ticks. It's going to come back to your entry. You need to get comfortable with feeling this heat. And you have to be careful where you pick your spots. Now, the A trader here would not have been filled till the bar closed up through here. The A trader, the one that was here originally, this top one, you would have been filled somewhere right over here. So you avoided all of this. Let's see how this trade played out. Okay, you ready? Let's play this trade out here. See how it went. All right, everybody's in. Everybody's in, depending on your fill. You may have gotten your scalpers off here, perhaps. Definitely this one did. The lower one would have definitely gotten a scalper off. The middle one probably too. Upper one, maybe not a scalper just yet. And then it starts to reverse on you. Now let me ask you something here. Now this is really important, okay? Let's say you got filled on any one of these three. The aggressive one, the middle one, or the top one. You got in, maybe you got a scalp off, maybe you didn't. When these bars start forming like this, and we have our initial stop is sitting down here, right? What should we do? Just leave it down here? Just let it sit down there? What should we do? Market popped up, moved in your favor. You're up a little bit. Maybe you got a scalp off, maybe you didn't. And all of a sudden you notice these bars aren't going up here anymore. What do we have to do about that? Do we just sit and watch it? Oh well, got my stop down here. We'll see what happens. No, you got to drag your stop up right away, don't you? Is anybody dragging their stop up? Get it close to break even, maybe even a couple ticks behind it. Because here's what happens. Thing comes all the way down into there. So that trade didn't work out. No matter where you got in. Well, the lower one did. Maybe the middle one. All right, so you didn't get this trade right. Well, we're still 3 o'clock in the morning, so let's just continue on here. Now the market comes all the way back down into here. We're below the mid band, and it's doing this. Where would the region box go, or where would you put a limit order? Let me do it a different way. Let me say what would be the location of the top of the region box, and would be a number over here. Here's the numbers. Where would the top of the box or limit order go to get in? We need a number. I'll make it bigger for you. Where does the top of the region box or the limit order go to get in this trade right here? I'll give you 5 more seconds. 12 to 19 is the box. 912. Predictor entry from Lee. A lot of 20s. There's a 24 coming in. I don't know. 24 is pretty high there, Pat. You have several bars. We say that we want to look at least at 2 or 3 or 4 bars. In this case, I think the region box would definitely, the position of the top of the region would be located right here. That looks big because I have it blown up. That box is actually only about 7 ticks. And your buy limit order would sit right at the top of the box right there. Now there is another tool you can use. You can use your Ray tool. The Ray tool, everybody remembers how we use that. We put the position at the top, and then we let it go over the top of the wicks of the candles like such. Let me see if I can make that a little thicker so everybody can see it. There. Now the advantage of the Ray tool here is the fact that, you know, sometimes you get this little sort of you know, what we call the ABC type of retracements we talk about once in a while. There's your B, you know, here's your C thrust down into here on the retracement. You know, you can make the case that this might be A, B, C, kind of working on a little bit of a D here. Got a doji candle just under 14. In other words, the market's trying to find some support to bounce in here, yes? I would say that's a pretty good region box. With, if you said anywhere around 18, 19, or 20 for your entry, that's pretty good. I would consider that a good solid box. Like I said, on the Ray tool, the way the extension of the Ray works is that, let's say that was a D, A, B, C, D, and for some reason you get an F leg down like that, we don't really care because the Ray just keeps going down and down and down, and if it never triggers, if you wouldn't get a fill on a region box, a Ray, or a limit order. Nothing would fill unless you get a bounce, right? So we don't really care getting long about the bottom of the box. The only time we care about the bottom of the box is if you put the box and let it go both ways. Or you're thinking short and you want to put a sell order down here. But the market's still going up, so we're not going to do that. So we're not enabling the shorts here, okay? Let me get the chart back together and see what happens. And so we close up outside of the box. Pretty much all 3 cases were filled long on the close of this bar right here. Region box, limit order, and Ray all filled long right here, roughly in the 1920 area. I don't consider those red bars a trend reversal at that point, Mario. In my view, that's just simply a deeper retracement in an overall uptrend. I know red bars make people nervous. I understand that. We've heard it 100 times. I know, you know, particularly in an uptrend, when you get underneath the midband and the bars turn red, some people visually have issues with that. I understand that. It's perfectly acceptable. If you don't like when it goes this deep, then you know what? You don't have to take it. I mean, there's lots of trades that come along here, and you don't have to take every one. If you're uncomfortable taking this, well, then just pass on it, or go into sim. You know, get your sim account up there. Put a sim account up and play around in sim and try to experiment with the different tools, region box, Ray, limit orders, until you get a good feel for it. Let's see what happened on this trade. Pops up, chops around a little bit, hangs around the midband, goes up, and then it takes out the swing at the top and continues to run. So that second trade turned out to be pretty good. So in the case here again of the limit order, and you know, you're faced with using what I'm doing just physically for those of you who want to try this. You know, if you don't select to use the region box and you don't use the Ray tool and use a limit order, you're filled long here. Your initial stop, right click, sell stop. I'm right clicking on the chart. That brings up this menu. Here's your buy limit, here's your sell stop. You're going to use these two. Okay? If you put multiples on, let's suppose that you go with 2. And you're in 2 long from here. We have to put we're going to go, you know, I don't know, let's say we go 6 ticks up from our entry here, and we put our first target, which would be 25. That'd be right here. So we right click. It happened pretty quickly. Put a sell order right there, and you're taking out of your first lot right there. And you got to remember, if you're doing this manually, I don't necessarily endorse that or recommend it. I'm trying to show where the trades are with this, okay? The region box and the ray would automatically put your stops and put your targets in. You don't have to worry about any of that. So if you had a 20 tick target on this, it'd be sitting up here somewhere. Yeah, 20, 39. Yeah, 20 ticks up would be somewhere up there. 6 tick scalp and a 20 tick runner. And then, of course, as the market came up to that, you could move it out of the way, and here would be your trail stop, which on the second lot, you would have to remember to take this down to 1, right? You don't want to get short when it flips. We got to remember that. Everybody listening? Here's your stealth. We're following stealth up. We're following stealth up. You're taking your target. You're running your target. Your target's running. If you manually manage the trade, that's how we do it. And then on this pullback right here, it probably got you. You know, somewhere on this bar right here, stopped you out on your runner. Which in the end, ironically, turned out to be pretty close to the 31. I think that's 22 ticks on that second one, right? 19 to 20, 41. Yeah, 22 ticks. You know, you're never going to get, I mean, here's the way it works, everybody. And I think most of you intuitively know this. And if you traded any amount of time, you already know this. It's very rare that you will ever get the very top of a trade, the apex of it, get out just perfectly at the last tick. It's pretty rare. It can happen, but I would suggest to you it's probably more luck than skill. The other thing is that when you're going to get into these trades, you see that you're going to give up some down here. You're never going to get, I mean, if you knew a support level and you put a buy order sitting right there and you bam, you could theoretically get the bottom here. And if you happen to drag your target right to the apex, it would be luck. But theoretically, you could get in, you know, you could catch the entirety of this trade here. In reality, the way most trades go is you're going to give up some here because you're going to get filled somewhere up in here. So you're not getting this part, right? Right? And then you're not going to get the top because the trail stop is going to always give some back at the end. Yeah, you know, you could have been a little more aggressive on your stops. You could have come up underneath the close of those bars, aggressively following it all the way up under the close of the bars, close of the bars, close of the bars, and then the aggressive out would be right here. You know, saved yourself another, I don't know, 6 or 8 ticks. Everybody see that? Okay, that looks good, Jim. I see your comments. So in this case here, if you were trading this particular time on YM, you had one small loser, probably got you for 6 or 8 ticks. You made that back on your scalper here, on your entry off the deep retracement. You popped your scalper there, and then you netted the 22 ticks on the runner up to here, depending on where you got out. So all in all, 3 trades, 2 winners to the scalper and a runner and a stop out. All right, any questions on that? Let's move on. I want to look at one more YME trade, and then we're going to go to some other instruments. While I'm teeing up the next trade, please type in the other instruments you want to see. Type in the other instrumentos you would like to see trade setups on. All righty. Type them in. You got a couple minutes here. Give me 30 seconds. Tee up another couple trades real quick here, and then we'll move on to something else. You know, I just don't want to show. I don't want to show the easy trades. I want to show trades that are a little more complicated, because the more complicated ones are things you're going to run into in real life, right? All right, I got a couple other good ones. Okay, I see a whole list. Everybody wants to see NASDAQ. I don't know why people trade NASDAQ. You must take heart medicine and want a heart attack every morning. I'll show it, though. I'll show it. I'm just kidding. Don't panic. I'll show you. RTY is another good one. If I was going to type in anything and I was out sitting in your shoes, I'd be typing in RTY. RTI is 100 times smoother than you get the same amount of movement as NASDAQ with 1/10 of the headache. But if you want to wrestle NASDAQ all morning, more power to you. Hey, listen, I'm going to show you something here. Lee says, NASDAQ beat me up and cost me money today. RTY is okay, but the volume is still light. I'm not worried about the volume too much anymore, Lee. I've seen it get up to 8,000, 10,000 contracts. Now, granted, that's not the 40, 50, 100,000 lot you get on NASI and the other instruments, but all we care about is the fills. And the fills have been pretty good. I don't know. Fills have been pretty good. So, hey, listen, I want to show you something here. For those of you that are having trouble seeing this whole idea of a swing and where to get in, let me show you something. Okay? This is kind of mentally what I do, and this might help you a lot. Don't worry, I'll show NASI and I'll show RTY. I'll show them both. All right, here's the kind of rule that I use. Here's the kind of rules that I use. Okay, you have a swing here, and it's retracing. So in my view, when you go down, each time you come down and you make a swing, it's got to break that swing, right? And so here, and now you're looking at here. Close above. Close above. In other words, how do we know that, and I asked this before, how do we know if a market is still going down or it's starting to go up? Well, I think I've said in several webinars, I use the 2-bar rule. So I go back at least 2 or 3 bars. I said that earlier, right? You go back, you're looking at the current bar, and you're going back. This did not close above. This is not a long. Got to close above. Got to close above. Got to close above. Now, in this case here, where did it close above? Right here. Now, the aggressive entry would have been here, a less aggressive entry in terms of the top of the region box, and or a limit order would have been there or there. So right click, buy limit, place it there. Right click, buy limit, place it there. Top of region box would be here or here. In the case of the ray tool, we place the top of the ray at the apex where it reversed, and we follow the candles down, the tops of the candles, to get long like such. And we can make this a little bigger so we can see it. Either one of the 3 entry type, well, the region box, the ray, and the limit orders, either this bar or this bar, you're filled long. Okay, let's do another one. Let's do another one. That was an example of another shallow retrace, right? Okay, now we're coming up. We're coming up. Now I want you to do this. Yeah, I call it a 2 or 3 bar rule. So it's not really complicated. I'm just trying to show it here and explain it as simply as I can. When a market starts to retrace, I'm sort of watching. Did it clear that? No. Did it clear that? No. Did it clear this? No. We're down. You just sort of keep ratcheting on down, and then normally you're going to get a 1 or 2 or 3 bar reversal. It's the reversal you want to get in on, where it starts to turn. These 3 bars, so everybody's clear what I'm talking about here. Can you see these 3 bars? In my view, the uptrend has resumed. We are no longer retracing. Now let's do an exercise together where I'm going to advance the chart, and whenever you think that this market is starting to retrace, I want you to hit the R button. When you think it's starting to retrace, here you see it's still going up, right? Here's Weimer. It's going up. This is right at the open of the market. 630 is right here. 635, 640, 645. We all see market was going up. This is the thrust. Thrust in the direction of the trend, which is up. Yes? Thrusting. How else do we know it's thrusting? Well, blue bars, mid-band stepping up. Everything is blue. It's staying above a green stealth. Everything is in our favor, and if we took the long, we're making money. Yes? All right, here we go. I'll go bar for bar. And when you think this is starting to retrace, you hit the letter R. Ready? Okay, here we go. I'm going to go advance it bar by bar. Let me do that again. Okay, let me do that again. In fact, I recall in the room when this was happening, Gary and I were saying, it's getting really toppy up there at that 71. Take some coin. It can't clear it. It can't clear it. It could be a double, triple top. It's topping out. I think I recall, say, getting your stops up to 63 or something in that area, 61, 63. I can't remember exactly. By the way, just a quick pause. Why would I say put your stops at 63 or 59 or 60 or 61? Why would I be saying any of those numbers on your trail stop for this entry here or from long from lower levels? Why am I using those? Why are you hearing those numbers? Does those numbers correlate to anything? And the reason I'm saying this to everybody is that you can do the same thing that I'm doing. There's no mysterious. I want to kind of try to remove the mystery on this. It's nothing. Ooh, he must have some kind of weird stop crystal ball of some kind. Excuse me. Take a quick sip of tea. Yeah. Look, and this is how you know, right? Okay, look. Here's what we call line 6. So if you hear the term 659, I'm calling that level out. If you hear the number 63. It generally is going to, tight stop is going to correspond to the stealth. In this case, a green stealth when it's going up. Now, if you hear a number that's different than those, but slightly under it, then here's what I'm doing with my number. I'll take this stealth line and I'll go 2 ticks under it. So that might be that would be a 61 stop call. If I'm using line 6 and there's a big run and it's getting these big deep retreat, 30 ticks up, 15 ticks back, 40 ticks up, 15 ticks back, I may go under line 6, in which case the stop might be 58. So when you're managing your trade and you are long from whatever level you got in at, and you're trailing your stops, and I'm helping you with these numbers, you can do it yourself. You can watch the stealth line. That's obviously tight. Everybody knows that. You can fade under the stop, the stealth line on your stop by a couple of ticks. Yes? You can use line 6. Generally, that's pretty good at 59. A lot of times that will hold on these pullbacks. You saw that in a lot of trades today when we were long. Or line 2. So on the short side, conversely, on the short side, you would look at a red stealth, or you'd be looking at line 2, this red line right here. If you were short, it was dropping, right? Yeah, so that's the stop levels. There's no mystery to it. Now, almost all of you, excuse me, hold on a second. Almost all of you typed in the letter R when I did this. So for those of you who are watching this and might be sort of wondering what is the trigger to tell us that we are now retracing, what might that be? Well, let's think about it for a second. In the case of this run up here, you can clearly see that we remained above the stealth all the way until it broke here. That's a sign. Retracement, yes. We had bars closing up near the high of the swing all through this section. It took about 5 minutes sitting up here. All closing up, pushing it. It's trying to get higher, and the buyers just can't do it. Then we close below line 6, and you are stopped out. There is no question by the time that these two bars are forming, Those of you that caught it early and said on that bar we were tracing, that's very aggressive. Yes, you are starting to retrace. No question here you are retracing. And very definitely by here you are retracing. Now, you tell me when you're ready to buy and put a region box. I'm not going to draw a ray tool. I'll do that after the fact. And or put a buy limit. Here again, right click, buy limit. We're not going to do it, but you're going to type in a B. I'm going to advance the chart, and you tell me when you're going to put the box or a buy order in. Ready? Here we go. I'll do it bar by bar. When you're ready to buy, you're going to type in a B. Remember my rule. What was the rule I said about 2, 3, 5 minutes, a couple of minutes ago? What was the rule? I'll help you. Okay, I'll help you. When we get done with this, I'll help you. Remember that rule. Look back 2 to 3 bars at least. That's right, Mario. Where did this market actually break up? Okay, I'm going to help you. I'm going to help you, and then I'm going to show you why. I'm going to show 3 bars, and you pick one. Is it? I'm going to tell you what. I'm going to do 4 bars. Bar 1, bar 2. You type in when you think that the market has changed and it's going back up and you're buying it. Bar 3 and bar 4. From the left, 1, 2, 3, 4. Type in a number for the bar that you feel best represents what should have been the top of the region box or a buy limit order, or where the ray tool would have been pierced to the upside. Overwhelmingly, the number 4 has come in with a couple of 3s. Good. Now, one of you typed in a B right here. When these bars formed, there were a couple of you that typed in a B right here. Why was that not a buy? Why was this little bip here not a buy? Well, let's go back and look. What bar are we trying to close above to get long? This one? This one? Or this one? Sorry, these are a little messed up. These last 2 are pretty tight. We'll do the ABC. A is here, B, and C. Which one of these bars are we looking to close above to get long? A, B, or C? A, right. You've got to go back 2 or 3 bars, right? You got to go back 2 or 3 bars. You got to keep looking back at these swing levels. This is much too aggressive. You would have got in and stopped out for a loss. In my view, this would have been too aggressive as well. I always look back a couple of 3 bars. I identify that swing, and in my view, that's the top of the box, or that's where you right-click, buy limit order. It has to get past that. It never filled, right? So that was not a buy. What's the difference between what happened down here in this area and what happened right here? What is the difference between box A and box B? Hold on, I'm getting some kind of malware thing here. What's the difference between this and this? What is the difference? Well, If we count 2 or 3 bars from the bottom back, the third bar would have been right here. So right, if all of you said that it had to clear this for you to get long, you were correct. Yes. And it might have got you on that bar, which is bar 3, but more than likely it would have been 4 to fill you. Yeah, so you look at the lowest bar, and then you go back 2 or 3 bars. Look at the lowest bar, go back 2 or 3 bars. It's got to clear that. That's your rule of thumb. As markets are retracing, use that rule. It will help you. It will keep you out of head fakes and stop outs, getting in too early. That was one of the things in the pre-webinar discussion. Wait for the retrace, getting in too early, getting in too late. Try using that 2 to 3 bar rule. Whenever it gets a low, go back 2 or 3 bars. Gets a low, go back 2 or 3 bars. So the entry, when the market continues to work its way down, the entry lowers with it. But in my view, unless you have a very tight box where all the bars are right next to each other, you could have that. For instance, right here, let's say you didn't get this bottom and you didn't get in down here, and now you're looking at it, well, now your rule would look like this. The exception to that is if all the 3 bars are sitting right on the on the mid band right here like this. 3. We'll call it 3. If 2 or 3 is confusing, we'll go with 3. It's not always 3, but for the most part it's 3, but you can use 2. In the case if you use 2 right here, yeah, it would have got you in. Right here, if you look back 2, would have got you in. I generally look at 3. I look at the highest of whatever configuration looking back 3 bars, whatever the highest of that is. In my view, it has to clear that to get in. For me personally, okay, this is just personally how I do this. And with the reasoning being that if I get enough bars closing up here through that swing, I have to believe that there is a resumption of buying going on right in here. The buyers have stepped back in. They've clearly supported this, and now the buying has resumed. This mid-band box right here was a perfect acceptable box if you didn't catch any of these bars. Perfectly acceptable to go ahead and box it with a long trade here. And or right-click, buy limit order. Filled on this bar right in here. So let's play this out. What happened to this trade? Let's keep it going. Let's see what happened here. This chart's all jammed on me. Silly thing. Ready? Let's advance the chart and see what this trade turned out to be. I think we took this in the room. Wasn't it a 7 o'clock trade? We took this? Yeah, Object Trader would be region boxes like I'm showing here, Charles. It does work with Object Trader, yes. Yeah, so I'm showing limit orders, I'm showing boxes, I'm showing rays. The ray in this one would look like this. The ray on this one would have looked like this. If you drew it properly, it would not have gotten you in on that. In fact, that would be where you would have put the top of the ray. Can everybody see how when I'm drawing a ray backwards on the case of a long? Hold on. I don't want to get this tickle in my throat. Just 2 seconds to show how the positioning of the ray and why we're doing it like this. Blow this up real good. So as a market comes down, and I showed this earlier, right? A, B, C, D, E. You know, if it continues on down, the ray never gets filled. In this case, it closed above it. So one of these bars here, coming up through here, would have closed on the ray. Limit order would have been filled. Region box would have filled. Everybody's long from here. The late birds could have boxed it here. We talked about that. You'd be filled long on that bar right there. Or we talked about having a limit order here, and you would have been filled on that bar too. By hook or by crook, you're in. You got that, everybody? See that? You can use the wicks. In the case of the box, Kenneth, engulf the box with the wicks. You could. In this case, you would have boxed it like that. You know, you would have been filled either on that bar or that bar. Either way. All right, so we're long, and we are heading up. And if you have one lot, we're trailing the stop. We're trailing the stop. Your initial stop, of course, was down here. Let's say you don't have a second contract on. You're just trading one, which is perfectly acceptable. What we're trying to do is get our trade entries correct. And then we can manage our targets and stops. Let's say you initially had a, I don't know, a 12 tick target sitting up here. You see it starting to take off. You drag it out of the way. You drag it out of the way. You trail your stop, the aggressive one. Now notice, oops, I got filled. Is the market back here? Oh, I actually got filled. Okay, one thing, just real quick, and I want to show this. There are some times when the stealth and line 6 sort of invert off of each other. Okay, notice in this case here, the looser stop but with stealth would have been sitting here. The tighter stop would have been with line 6, which would have been right here. It pulls back, it pulls back. If you use the stealth, that's hard to say where you would have stopped out. Now, you can use the 3-bar rule on the stop too. That's much more aggressive. What's the 3-bar rule on the stop? Well, you keep going. 3 bars back from the apex. I'm talking about trailing stops. I'll show it with this line. You follow it up here. 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 The most aggressive stop exit is that approach right there. If you take that approach, you're going to be getting in and out of trades a lot more because let me close this out. I don't want to do a trade, obviously. This is just trying to show something here. Close, out, close, close, close. Because you're getting in and out more frequently. Perhaps you're a little more aggressive on your entries down here. Perhaps you're a little more aggressive in your trail stop posture. And so you're getting in and out. You're getting in and out. You may have more trades than a trader who gets in a little bit looser, has a little bit less of a stop, a looser of a stop. You let the market wiggle around at the top and the bottom. And so, they might have stayed in the trade until it finally broke stealth right up in here. So that was a good trade, huh? You were long from here, and you went all the way up to here. So you got 48, 50, I don't know, 28, 30, 30-something ticks. One lot, $150. Didn't feel any heat. On any of these bars, unless you put this box up here, you felt a little bit of heat with these 2 bars. All right, I'm going to have to get going, but I want to do one more. Okay? There's one more I want to show. I apologize to everybody. I didn't get to NASDAQ. I didn't get to oil. I didn't get to anything else, but it was really important that I show this in this level of detail. And I do want to show one more before we wrap. This is going to be an important one. I'm going to do the similar exercise. I'm going to do a similar exercise. I think that was good. Did everybody like that? Let's do this one more time. Let's do a buy. Okay. Let's do just like we did on the last one. I'm getting some good feedback on this. Yes. I like that. Okay, let's do that. Okay. We're going to do the retrace first. I'm going to go bar by bar, and you tell me when you think it's starting to retrace. You type in an R, okay? Here we go. Type in an R when you think it's starting to retrace. All right, I got to stop it there. You should have typed in an R by now. All right, yeah. I mean, look, you can use the 3-bar wall on the reversal too. Yes. Okay. Here's the apex bar. Go back 3 bars. It's right here. Right. You just continue. Your eyes continue to follow wherever the apex bar is. You go back 3 bars. Right. And it's got to break that. That could be your trail stop. That could be your trigger for a reversal or the beginning of a retracement. In my view, with these bars closing down, this is the beginning of your retracement. And you're looking to get out of your long trade with some stops. Yes? The R should have been typed in somewhere around here. And if you didn't type in an R by then, definitely over here. Of course, obviously, this is definitely closing through stealth and line 6. You're no question about it retracing. All right, I'm going to go bar by bar. You tell me where the buy comes in. Ready? You tell me. You type in a B for a buy. You tell me when the buy is triggered. In other words, using your 3-bar rule. Yeah, this is very similar. All these patterns are similar. That's what we do is pattern recognition. We're going to look at this over and over and over again until we get it perfect, right? Oops. Oh, I didn't go bar by bar. Don't look at that last. Oh, somebody even typed it out. Okay, I might have blown it. All right. Remember our 3-bar rule. Okay. Okay, here's the retrace. There's a retrace starting. You type in the buy when it's time to buy. When the buy is triggered. Good. 1B. I won't say who it is. Nobody typed in a buy. Good. Why? At any point from the swing bar, 3 bars back, had been broken to the upside in any of these cases. Here, let's look at them together. No. 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 There was no buy here. Nobody typed in a B. Good for you. I'll tell you what, I'm going to give you a standing ovation, and I'm not being facetious at all about that. That was most excellent. There was never a buy trigger in there yet. It didn't happen. No matter where you put the top of your box or how you drew it, or you put your limit buy order in or drew the ray, it never closed above the 3 bars. You never got long in there. Even the ray tool never got long. See how you put it over the top of your bars? It never closed above it, did it? Good. You're learning, everybody. Why did I not ever get this? This is helping me so much. This is very, very cool. It never cleared a wick of a 3 candle. Yes, precisely. Good. I hope this makes a difference for everybody. You know, I've been looking for a way to try to easily explain this, and I think this is probably the easiest way to explain it. Just boil it down to 3 bars back off the apex swing of whatever. But in the case of a short, it's the opposite. So you go the apex of the up candle, then the pullback for the short, right? All right, listen, I got to wrap. I was going to show something else here. Now, listen, here's what happens, okay? 7:30, we can anticipate a potential trend reversal. I think, Gary, we talked about this. I think Gary got short on this. I missed the initial breakdown short. You could have put a sell order here. The ray was never filled long. I remember saying boxing at the midman. I distinctly at 7:30 remember saying that. It closed down, and it did fill you short. Some of you took that. I know you did. I know Gary did. Now, look, here's where I got in. Notice what happens after you get this break here, okay, real quick, and then we're going to wrap this up. And notice how it comes down, and then it pauses and pulls back. This is about 4 or 5 minutes after 7:30, after the break occurs. If you miss this initial pop, what could you have done here? If you miss this candle down, you missed that, what could you have done here? Yeah, you could have boxed it in right here. Exactly. Put your sell order right here. You're looking to get short now under here. The trend has changed. Or you could have done what if you had a region box? You could say to yourself, well, this could be a deep retracement on another leg back up. What I'm saying is if you didn't have this box go both ways, which never got long but did get short, you could have reboxed here even though you're under the midband. So what happened? It breaks down and gives you a beautiful short. All right? Okay, good. Any final questions? I'm going to turn off the recorder. Thanks for coming, everybody. Appreciate your time. I apologize for this fan noise. I really like everybody putting up with it. I really appreciate it because it's so hot here.